we're going to use the income statement to show why an online business beats a business selling physical products. And this is kind of just to give an example of how the income statement can be used in some insights into particular setups of the income statement. And the one I'm going to use is called the two-step income statement. It's not the very simplified version, but for this tutorial, that's not too important. Okay, so each income statement is based off of some period, and we're going to work with, let's just say, monthly. This income statement is monthly. So we have, say, $10,000 a month in sales for our online business. And by online business, particularly this business is only selling info products. So it's only selling virtual products. And these might be ebooks, courses, audio, MP3s, things like that. So there's no physical product involved. That's key to this type of business and why it wins out over the physical product business. So let's take a look. Let's say we have revenue, and this is also called sales, $10,000 for the month. The next line is our cost of goods sold. This is how much it cost us to make this product. Okay, so over here we also have $10,000 for our physical product business. For us, we created an online course. We recorded it on our computer. We already had a microphone. We already had the software. The only thing involved was our time. And some people will say, go ahead and subtract out your time, your hourly rate to create that course. And unless you're very detailed about tracking the creation of a course, there's going to be a range of time. You're not going to have an exact time because there's going to be some things that you are unsure of to track. So maybe there's a little bit of research going on, there's the actual recording, there's some editing, there's uploading the course. So unless you're tracking everything, you can't really determine precisely what the cost of that course is. And as a side note, those are called cost drivers. They contribute directly to the cost of the course. But for us, or say for most one-person online businesses that may be doing consulting, they're not going to be booked 40 hours a week, a lot of them. So they may consult 5-10 hours a week. And if you want to go off of a 40-hour week, you can't really factor in your time, because unless you're doing the whole 40 hours consulting and then you have to take away, say, 5 hours to create your course, there's not really a way to bill by the hour of how much did this course cost me. So we're just going to put blank here. So the course didn't cost anything, let's say. We had a lot of time on our hands. We had 30 hours that we could create courses or whatever we need to do, because we're only consulting 10 hours a week, for example. Even if you're doing it for 20 hours a week, it's not taking away from your 40-hour week to create this course. So over here, the physical product, let's say it costs $5,000 to create this physical product. This is materials. This may be time for labor, different things like that to consider. So down here, the next thing we're going to have are what's called gross profits. Some people just call it profits, but this is not really profits. We'll see why in a minute here. So this is going to be $10,000. So for our online business, info product only, our revenue equals our gross profits. Not so with the physical products, because we do have cost. I'm just going to switch here as we go down into operating expenses next. We do need to subtract out, because we're going to contribute marketing to this. There's going to be hosting for the website. There might be graphics. Now, these graphics can go up here into cost of goods sold if they contributed directly to this one particular product. And also, if you created, if you went out and bought music that you wanted to use in your product, that could be under cost of goods sold. So then you'd have some cost. But the main point is that the costs are so extremely small to create this online product. It hardly compares to the cost of creating the physical product. And these graphics in particular down here that I have are ones that we use to create the overall website, our overall website during this month, not for the course. So we do have monthly expenses, and we're just going to say our monthly expenses were $500. Over here, we do have fixed expenses. So if you have, say, a dedicated office, you have, your electricity, you take out part of your rent for that. That's dedicated just for business use. That office is only business use. An office in your home, for example. Now over here, the physical product business, we're going to say they do have rent on a bricks and mortar storefront, and they have electricity. Let's just say this is $1,500, and they have their own marketing. They have liability insurance. People walking into their storefront, they want to be safe and not have anyone sue them if they fall down, something like that. So they've got other expenses, and we're just going to go ahead and put another $1,000 here for this. Okay, so these are what's called operating expenses. Need these for our business to function. Okay, and then what we come out with here is $9,500. Over here we have $2,500, so this drops down to $2,500. 5,000 minus this 2,500, and this is called operating revenue. So you can see profits are not profits. We got to go down here and subtract out some more expenses, and we get down to operating revenue. Now, the next thing is another set of expenses. There's one called interest. There's another taxes. For our online business, we didn't borrow anything, so we're not going to have any interest, because the interest would be interest on debt. But for the bricks and mortar business creating physical products, usually they do borrow something. So let's just say that they're paying $500 a month in their interest expenses. Then we have taxes. You can see the bricks and mortar will have less taxes because there's a lot of expenses that were taken out. So we're just going to say on this month here, another $500. So we can go ahead and already see that they have $1,500 left over at the end of after taking out all their expenses. For us, we don't have any interest. We don't have any interest expense. We have taxes though. We're going to go with $1,500. I don't know. I'm just coming up with a number here, and we're going to have $8,000. This is called our net revenue. This is what matters. This is the number we want to keep track of. I'm just going to go ahead and change colors real quick here. This is the number we want to keep track of in regards to what did we bring home and what goes into our bank account. So you can see profits are great, but that doesn't go into our bank account. Operating revenue, that's great too, getting closer, but that doesn't go into our bank account. Not until we get to the bottom here with our net revenue does it go into our bank account. So we can see the bricks and mortar has more expenses for operating their business. And then there's also the cost of creating the physical product. And this cost here is made up of what's called fixed and variable costs. So there are costs per unit of product, packaging per unit of product. Those vary. So the more product you make, the higher the variable costs are. And then there's fixed cost. No matter how many you create, there's setup cost, things, oiling the machines, whatever it might be. There's costs like that. So this online business with just info products and a few other criteria, and I will show you what those are. I call this a lightweight business because there's no employees. There's just one person. You outsource to virtual employees as needed. There's no physical product. There's no inventory because there's no physical product. So there are a number of things here. There's no storefront, so there's no bricks and mortar expenses, and you can see how great the difference is in money that you actually deposit into your bank account. Now, does this really mean that the info product online business, the lightweight business, just absolutely beats out the physical product bricks and mortar business? No, it doesn't. But if sales are the same, yes, it can. But it depends on who's doing the best marketing, because if you only sell, and it depends on the price of your product. So let's just say your revenue is based off of one product, $10,000. So each one is a $10,000 product. Then you did do quite well, so $8,000 versus $1,500. But if you only sell the one product for your online business, you make $8,000. Over here, they might sell 100 of them, so this ends up being 15,000. It ends up being a lot greater. It depends on who does the best marketing, who sells the most out of these that does better. So you can't just look at what I've written here as the absolute. But all things being equal, if they were to sell the same number of products or something close to it, this could actually sell, the physical business could actually sell a little bit more product. They could sell more and still not do better than the online business, the lightweight business. So that is just a quick look at an income statement and a comparison of a lightweight business to a physical bricks and mortars business. And I hope that sheds some light on the operations of the income statement. Key things to take away from here are oftentimes revenue will equal profits, gross profits to be specific, because some people will call operating profits, they will call this down here profits. So revenue often can equal gross profits for your lightweight business. Then you take out the operating expenses, the cost to run your business, and you come up with operating profits or operating revenue. And then you take out taxes, and you get net revenue at the bottom here for this month, and that's clear. That is what you can deposit into your bank account. So I hope you enjoyed it, and thank you for watching. Thank you for watching, and for more great business tips like this, please visit bitesizebschool.com.